All right, everyone, welcome back to the channel. We're going to do a quick and simple breakdown of everything that's been happening in the crypto market because, let's be honest, it's been a complete roller coaster lately. 1 minute we're seeing green candles everywhere. The next it feels like the floor is falling out from under us. There's a lot to unpack, from what's happening on the world stage to what the big players in the US government are planning, and all of it is sending ripples through the prices of Bitcoin, Ethereum, and pretty much every altcoin out there. So what we're going to do today is cut through the noise. I'm going to walk you through the key events that are moving the markets, from geopolitical tensions that are making investors really nervous, to the upcoming meeting with the US Federal Reserve that has everyone holding their breath. We'll look at which coins are surprisingly doing well, which ones are feeling the pressure, and some of the bigger tech and corporate news that could have a long-term impact on the entire space. It's a lot, but we'll go through it step by step. Just a super important reminder before we jump in. This is purely for informational and entertainment purposes. I'm sharing what I'm seeing and the data that's out there, but this is absolutely not financial advice. The crypto market is incredibly volatile, and you should always do your own extensive research and maybe even chat with a professional financial advisor before making any investment decisions. So, with that said, if you appreciate this kind of breakdown, do me a favor and smash that like button for the YouTube algorithm. Let's get into it. So, first up, we have to talk about the geopolitical situation, because it's having a massive, and I mean massive, impact on market sentiment right now. Tensions between Israel and Iran have escalated, and whenever there's this level of uncertainty on the global stage, investors get spooked. They tend to pull their money out of what they see as riskier assets, and let's face it, crypto is at the top of that list for many people. This is what's called a risk-off environment. People are looking for safety, and that often means moving capital into more traditional assets like gold or the US dollar, at least in the short term. We've seen this play out directly in the crypto charts. As soon as news of potential conflict hits the wires, you can almost watch the sell orders start piling up. Bitcoin, which is often seen as the leader of the pack, takes a hit, and the altcoins tend to follow, usually with even bigger percentage drops. It creates this really volatile, choppy price action where the market can swing dramatically based on a single headline. This nervousness is a key reason why we're not seeing a smooth, sustained rally. Investors are on edge, waiting to see how things develop, and that caution is keeping a lid on prices for now. The next big elephant in the room is the upcoming meeting of the US Federal Reserve. Honestly, this is probably one of the most watched events for any investor, whether you're in stocks, real estate, or crypto. Everyone is waiting on the edge of their seat to hear what Jerome Powell and the Fed decide to do with interest rates. For months, the market has been hoping for interest rate cuts, which would theoretically make it cheaper to borrow money and encourage more investment into assets like crypto. It's that classic cheap money theory that often fuels bull markets. However, the recent inflation data hasn't been as encouraging as people hoped. It's been a little more sticky than expected, which means the Fed might be hesitant to cut rates just yet. They might even signal that they plan to keep rates higher for longer. If that happens, it could be a real headwind for the crypto market. Higher interest rates make safer investments, like government bonds, more attractive, which can pull money away from crypto. So the commentary from the Fed will be just as important as the actual decision. We're all listening for clues about their future plans, and the market will react instantly to whatever they say. Now for a story that really blurs the lines between big tech, government, and the broader digital asset space. It's been reported that OpenAI, the company behind the revolutionary ChatGPT, is now working with the US military. Specifically, they're helping the Pentagon with cybersecurity software and other AI-driven projects. This is a pretty significant development because for a while, OpenAI had a policy against using its technology for military purposes. Their decision to reverse that stance and partner with the Department of Defense is a major move. So, why does this matter for us in the crypto world? Well, it shows a deeper integration of cutting-edge technology with powerful government institutions. When a company as influential as OpenAI makes a move like this, it signals a broader acceptance and adoption of advanced digital tools at the highest levels. This can have a ripple effect, potentially opening the door for more government-related projects involving blockchain and other decentralized technologies down the road. It's a sign that the tech world, which crypto is a huge part of, is becoming more and more intertwined with the establishment, which could bring both opportunities and new regulations. While a lot of the market has been shaky, one coin that's been getting a lot of attention is XRP. It's actually shown some surprising strength, posting gains while many other major cryptocurrencies were either flat or in the red. This resilience is interesting because it suggests there's a dedicated community of buyers and holders who are stepping in to support the price, even when the broader market sentiment is negative. A lot of this positive momentum is likely tied to ongoing optimism about the outcome of Ripple's legal battles and the potential for XRP to be used in cross-border payment systems. However, it's not all sunshine and rainbows for XRP. When you zoom out and look at the technical charts, some analysts are pointing to a potential bearish pattern. Specifically, there's talk of a symmetrical triangle formation on the longer-term charts, which often breaks to the downside. Furthermore, the price is still trading below some key moving averages, which technical traders see as a sign of a continuing downtrend. So we have this conflict between short-term positive price action and longer-term cautionary signals, which makes XRP a really interesting one to watch right now. Shifting gears to the number 2 crypto Ethereum, we've seen a very bullish sign from institutional investors. According to recent data, a specific Ethereum-based investment product saw inflows of over $21 million. Now that might not sound like a colossal number in the grand scheme of things, but it's significant because it shows that the big money players, the institutional funds, are still actively accumulating Ethereum. They're not being scared away by the short-term volatility. Instead, they seem to be using these price dips as a buying opportunity. This is a really important metric to watch because institutional flows are often a leading indicator of market direction. These are sophisticated investors who are typically looking at the long-term potential of an asset. When they start pouring money into Ethereum funds, it suggests they have strong conviction in its future, whether it's because of the upcoming upgrades, its role in DeFi and NFTs, or the potential approval of a spot Ethereum ETF. This consistent buying pressure from large institutions can help to establish a solid price floor and provide the fuel needed for the next major leg up. And of course, we have to talk about the king, Bitcoin. Its price action has been incredibly jumpy, and it's really the epicenter of all this market uncertainty. On one hand, you have the negative pressure from the geopolitical tensions we talked about and the nervousness around the Fed meeting. These factors are creating significant selling pressure and have caused some sharp drops. Every time a concerning headline comes out, you see Bitcoin's price react almost instantly, pulling the rest of the market down with it. It's been a clear case of the macro environment dictating the price. On the other hand, when you look at the technicals, there are some conflicting signals. For instance, the Relative Strength Index, or RSI, on certain timeframes was indicating that Bitcoin was oversold, which is often a buy signal for traders looking for a bounce. But at the same time, the price has been struggling to break and hold above key resistance levels. This tug-of-war between bearish macro factors and some potentially bullish technical indicators is what's causing all this volatility. It's a battle between the sellers who are reacting to the news and the buyers who are looking at the charts and seeing a potential discount. In the world of crypto-related companies, there was a big piece of news from SRM Entertainment. For those who don't know, SRM is involved in the broader digital and collectible space, which often intersects with crypto and NFTs. They recently announced a massive $100 million investment, which is honestly a huge injection of capital that signals some very ambitious plans for the future. An investment of that size doesn't just happen. It means that serious investors believe in the company's vision and its potential for massive growth. Alongside this huge investment, the company also announced a major leadership change, bringing in new executives to steer the ship. This combination of fresh capital and new leadership is often a recipe for significant strategic shifts. For the crypto space, this is important because it shows that even in a volatile market, there is still a tremendous amount of venture capital and private equity money ready to be deployed into promising companies in the sector. It's a vote of confidence in the long-term viability of the industry, even when the daily price charts look chaotic. Here's a development that's a bit more technical, but honestly has really important long-term implications, especially for the Bitcoin ecosystem. The team behind Nervous Network, or CKB, is making significant progress on what they call the RGB++ protocol. In simple terms, this is a piece of technology designed to bring more advanced smart contract capabilities to the Bitcoin network. It's essentially a way to help Bitcoin, which is famously secure, but, somewhat limited in its functionality, work better with all the new innovations happening in crypto, like DeFi and NFTs. This is a huge deal because it tackles one of the biggest challenges for Bitcoin: how to expand its utility without compromising its core security and decentralization. By building this Layer 2 type of solution, CKB is positioning itself as a key infrastructure player for the future of the Bitcoin ecosystem. If they are successful, it could unlock a whole new wave of development and value on top of the world's oldest and most secure blockchain. It's a reminder that while price action gets all the attention, there's a ton of crucial building and innovation happening behind the scenes. After a pretty rough patch for the altcoin market, we're starting to see some green shoots of recovery, particularly from two major players, Solana and Sui. Both of these blockchains took a significant hit during the recent market-wide dip, with prices falling sharply as investors fled to safety. The sell-off was pretty brutal and had a lot of people wondering if the momentum for these so-called Ethereum killers had finally run out. It was a real test of resilience for their communities and ecosystems. However, in the last few days, both Solana and Sui have shown impressive bounces. They've begun to recover a good portion of their recent losses, and they're doing so with strong trading volume, which suggests the recovery has some real conviction behind it. This bounce back is a positive sign for the broader altcoin market. It shows that even after a steep correction, there is still strong underlying demand for high-performance blockchains that can offer faster and cheaper transactions. It's a sign that traders are willing to jump back into these names as soon as the market shows a little bit of stability. And the market sentiment is starting to improve, at least a little bit, when the meme coins start to wake up. And that's exactly what we've been seeing. Coins like Dogecoin, Shiba Inu, and Pepe, which are often the most speculative and sentiment-driven assets in the entire crypto space, have all been posting some really nice gains. After getting hit hard during the market downturn, they are now leading the charge in the recovery, with some of them up double-digit percentages. This is classic meme coin behavior. Because they're driven more by community hype and social media trends than by fundamental technology, they tend to experience the most extreme swings. They fall the hardest when people are scared, but they also bounce back the quickest when a little bit of optimism, or hopium as some call it, returns to the market. Seeing Dogecoin, Shiba Inu, and Pepe all in the green is often seen by traders as a risk-on indicator. It suggests that speculative appetite is returning, which can often be a precursor to a broader recovery across the rest of the crypto market. So, as you can see, the crypto market is being pulled in a dozen different directions at once. It's absolutely crucial to remember how sensitive prices are to what's happening in the wider world. A single political development in the Middle East, or a few carefully chosen words from the chairman of the US Federal Reserve, can send prices soaring or tumbling in a matter of minutes. This is why trying to predict the short-term moves is so incredibly difficult, if not impossible. The market is reacting to real-time news, and that news can change in a heartbeat. Because of all this uncertainty, it's more important than ever to zoom out and look at the bigger picture. Don't get too caught up in the 5-minute charts. Look at the daily, the weekly, and even the monthly timeframes to get a better sense of the overall trend. More importantly, this is the time to really dig in and do your own research. Understand the projects you're interested in, follow the news from multiple sources, and formulate your own opinion about where you think the market is headed over the long term. Don't just follow the hype. And I have to say it one last time to be crystal clear. Nothing in this video was financial advice. I'm just a guy on YouTube sharing information and my perspective. The world of cryptocurrency is inherently risky and highly speculative. Before you even think about investing your hard-earned money, please consider speaking with a qualified financial advisor who can help you understand the risks and make decisions that are right for your personal situation. Stay safe out there, be smart, and thanks for watching. I'll see you in the